This Week in Money is archived online at talkdigitalnetwork.com.
David Morgan is our go-to guy on silver, and you can find him at silver-investor.com. That's the home of the Morgan Report. David's coming to us today from Spokane, Washington, the heart of Morgan country. David, it's good to have you back on This Week in Money.
Phil, it's great to be with you. Thank you.
You are just back from the Vancouver Resource Investment Conference. I want to apologize in advance for the rain and fog. That was pretty awful, wasn't it?
It was a bit cold and didn't see any sun, but it was a good conference.
That's the way it's generally like in January here in Vancouver. But let's ignore the weather outside and talk about what was going on inside. How did the conference go this year? What'd you think?
Well, I would say it was warm to warming, meaning it wasn't one of the hottest conferences I've been to. But I think the overall mood was cautiously optimistic, or better than that. I talked to one of the marketing guys that said he had a better 2 days than he has had in the last 6 months, so let me rephrase that slightly. He did a lot of business with companies that were willing to spend money on marketing, so obviously there's companies out there, and more than one, that are saying, you know what, things are getting brighter, they're getting better, we're willing to spend some money here. So I concur. I think that the bottom is pretty much in, or forming, or with the end of the bottoming process, or the consolidation. And I'm looking for a good year for the precious metals in 2013, not an exceptional year.
Interesting combination of exhibitors and speakers, and you were one of the speakers there. You're always at these things, and we appreciate you coming to them and appreciate bumping into these things. Your speech this time around, why now is the best time to invest in precious metals? Give us just a thumbnail sketch of what you were talking about.
Well, Jeffrey Christian, who's pretty famous, and he's more established probably than I, but he does good work in my view. And he said a long time ago that 90% of the move comes in the last 10% of the time. And knowing the silver market, as well as I do, and certainly I'm not a know-it-all, but looking at it, I thought, that's about right, and I never really did the arithmetic, because it's a very small math problem, but I actually did that, and I pointed out that 87.5% of the move came the last 7% of the time. So that means that we're going to probably see a great big move in silver, and this happens in all markets. Silver happens to be extreme, but happened in the tech wreck, happened in the bond market, happened in the housing bubble, happened in Japanese stocks. Mm-hmm. All markets get very overvalued, and it gets into this kind of manic phase where it just keeps going up and up and up and up, and people say, it can't go any higher, and it keeps going up and up and up. Silver did that in 1979 and 1980. I think it's going to do it again. In fact, I think it's going to do it again in such a manner that it's going to make the 1980 high look like a warm-up.
Okay.
Time will tell if I'm right or not. So I wanted to point that out to everybody, that the biggest move lies ahead. It's going to be more treacherous, it's going to be more difficult, and it's going to be faster moving, but nonetheless, it is ahead of us. So that was the main thrust of what I spoke about at the conference.
Boy, you wouldn't have to look much farther than this for the reason for what's going on in precious metals. This is from the latest Scotia Makata Metal Matters Monthly. And I'll quote here, the financial system is drowning in debt. There seems to be no end in sight to ongoing massive deficits. Confidence in the financial system and in the fiat paper that facilitates it will remain low.
It's funny. I have to comment, but that's like something I wrote about
years ago,
2003 or something.
Yeah.
Now somebody, like Scotia Makata has printed it, and this is, pretty much mainstream. They are a metals dealer, but they're also a bank, well-known, well-established, stalwart of a bank, really. And here they are, and, I was radical when I was making those statements in the early 2000s, but now it's a matter of fact. And it does portend, I believe, strongly that we're going to see more and more move into the metals as time marches on. And this is going to be, I think, the turnaround year, meaning that a lot of newer people are going to come into this market and buy with confidence and hold. So I think we're going to see, again, higher metals prices this year.
David Morgan, our guest here on This Week in Money. Here's an interesting stat we were talking about earlier. Holdings in silver ETFs standing at more than 600 million ounces as we're talking. Now, compare this to late 2008, 3-4 short years ago. It's doubled in that time space.
Again, I think this just shows that the strength in the silver market for real physical silver as an investment continues to grow, regardless of what you hear in the mainstream financial press, and regardless of the negatives. This is a fact that cannot be disputed. Of course, silver moves in and out of these ETFs, but the overall trend has been more in than out. And again, the tightness in the silver supply, Phil, is very, very great. You wouldn't know it based on the price, and especially the price pattern, meaning the charts over the last several months. Nonetheless, the fact remains that the market is much tighter than it appears if you were just going to look at a chart.
So what's driving silver prices? Is it investment demand or industrial demand?
Well, it's both. I mean, silver doesn't care what the demand is from. It's demand, but it's really investment demand because it's always at the margin. If there was no investment demand for gold, who knows what gold would be, because really there isn't an industrial demand for gold per se. Yes, there's a very, very slight amount. Basically, all demand for gold is investment demand, and silver has the luxury of having investment demand, and on top of that, a substantial industrial demand, and for most cases, it's price inelastic, as John Embry pointed out during his lecture at the Vancouver Resource Show.
What about volume? What's happening with trading volumes? Are they still low? What's going on there?
Good question. It's one of the key things I look at on the technical side. And the volumes have been low, average to low. They're average or lowish in the average. So that does not excite me. When I see the metals moving up or down, I want to see what the volume is. And when they're average or slightly lower than average, which is where we've been, it doesn't show a lot of strength. So even though the market's very tight, as I said, there isn't a whole lot of strength in the futures market. Now, of course, the physical market's a different animal, and the volumes there appear to be above average. But those are very difficult to get a handle on. With the futures contracts, I can call my broker and get a number. I can compare it to other numbers, and I know what the paper traders are doing. On the physical side, it's more of a survey that I do by literally picking up the phone, calling the largest wholesalers in the country, some of the largest retailers in the country, and say, how's business? And taking kind of a survey and getting from that. Having done that recently, the physical demand side is still very robust relative to what, again, you would think by the price alone.
Well, you sure have to take these forecasts with a grain of salt. Here, as you're talking, I'm looking at the latest forecast from Morgan Stanley. They say demand for gold is unusually low. They say that's going to keep a lid on prices. Does that make sense?
Well, they're right if the demand is really, really low, or there's going to be a lot of sellback, or whatever side they're pushing. But you really have to be objective, and I'm biased. I admit that I try to stay objective when it comes to the numbers, but I don't buy into what they're saying. I don't think the demand side is that low. And there's so many reasons why, as Scotia pointed out in the article that you just read, that there's so many reasons to get back into the metals if you've left it, or to add if you're in it, or to become a new person or entity or trust or pension fund or hedge fund or what have you into the precious metals. So there's a lot more going on for buying them than there is for selling them.
Here's another opinion, David, from Morgan Stanley about silver. They say silver could outperform gold on a price basis as it has what they're calling a cheaper entry point.
Well, that's true, and silver has exhibited that in the last bull market. I mean, once gold got to a certain level, no one knows the exact number, but the idea is very clear. Once it got to 500, 600, it was unaffordable to many, many people. And so they looked at the next best thing, maybe in their view, not in mine, but in theirs, and said, I can't afford gold, I'll buy silver. That will happen again, and no one knows the price point. I'm forecasting somewhere around the $2,000 level. Okay. Once gold gets up there and starts making news headlines again, see a lot of people go, geez, $2,000, I don't make that in a week, or I don't make that in 2 weeks. But silver, it's only 65 or 75 or whatever it is at that time. I can afford that. So you'll see a lot of people that want to get in the precious metals, and they will choose silver over gold for a variety of reasons.
Somebody I was talking to last week said, use this phrase that I hate, silver, the poor man's gold.
Well, I, can shut off most of these negative connotations. There's so many fill around silver, junk bags, what do we call it, scrap supply, and all the stuff that permeates the silver market. What I always laugh about when it's the poor man's gold is if you go back to the beginning when I was suffering as far as making a living, but who was buying? Warren Buffett, billionaire. George Soros, billionaire. Bill Gates, billionaire. So if those are the poor men that are buying silver, so be it. But the billionaires were buying the bottom. They weren't buying gold, by the way. They were buying silver. I mean, they might have bought a little gold, but their large investments, at least that were publicly disclosed, was in the silver market. I mean, Buffett bought 129.7 million ounces of silver, silver itself, silver bars. He moved it to London, and that's basically the basis for the start of the silver ETF, so the SLV. So, that's the truth of the matter. So, again, I kind of just bite my tongue when someone calls it the poor man's gold.
I can see why they call it the Rodney Dangerfield of precious metals.
Exactly.
But it's finally starting to get some respect.
Well, it is, and it will. And that's, one of the things I haven't talked about in a long time is, why I became such a silver bug. And the reason was I was kind of just a gold bug during the first run, most of the run in the precious metals during my earlier days. And after the thing peaked and came down, I asked a couple of really important questions. I said, why were the hunts in silver? What was it that intrigued them about the silver market over gold? Of course, part of it, was a lot of things were in it. But basically, based on that study is when I decided to say, the dynamics for silver actually are superior to gold for so many different reasons.
David Morgan, our guest here on This Week in Money. You can find him online at silver-investor.com. Let's take a look at what happened this week in gold and silver. Gold seems to be in consolidation mode, Dave. Poised for a 2% loss this week. Prices falling for 3 straight sessions.
Yeah, I mean, I do look at it daily. I do look at it daily. And it's kind of wearing us out. I mean, I coined the phrase on one of the other financial channels that, this market will wear you out or scare you out. Very typical of a long-term secular bull market. It's not much we can do about it. Knowing that maybe will help you, keep your conviction. And I do, again, think that we're probably near the end of that. I do think that we're going to see a pretty good first quarter in the metals. And over the year, I think we'll be higher significantly by the end of 2013. And there's so many black swans out there, Phil. I could end up being very, very conservative on this. I mean, something could happen. Who knows where? I won't even venture a guess. There's so many possibilities out there where the metals just catch fire because of some event in the banking system, the brokerage system, the derivatives that are out there, a country, a mining accident, shipment failure. I mean, there's tons of things out there that could cause a real ignition, you might say, in the precious metals. And there's a lot more of those that are possible than there are, a meteorite, a pure silver hitting the ocean, and all of a sudden there's a huge abundance of silver supply.
Or an asteroid.
Or an asteroid, there we go.
Now, gold seems unable to break through this $1,700, this psychological $1,700 mark. If it does, what happens then?
Well, it goes to the next level. I mean, there's overhead supply if you trade commodities, and any commodity, even gold, and people think, well, the market's manipulated, and I agree for the most part, but it's still, they behave as, very closely, whether they're manipulated or not, based on price patterns. And so you have other levels that you have to break through. Once gold gets above the $1,900 level, which is basically its current high, then it will be on its way again. And it's not that difficult, but most people are too concerned with how difficult it is to do technical analysis or whatever. It's really not that hard. And it's not a perfect science, but it's a good art. I've learned it many, many years ago, and I apply it with my own methodology that I found to be much, much better at making significant entry and exit points than any other methodology. It's one that is not taught very often, but it's been tested, and it has a greater ability to make profit than any other method out there. So, why not use what works?
Dave, silver down this week. It's moving down by about 1.5%, still up by around 3% year to date.
Typical, really. I mean, again, I think that we're just going to have to work off some of this overhead supply and get through it. And it'll take some more time, but again, I don't think we're that far away. I think after this first quarter is over, if we can get silver above 35, and I think that'll be the case, I'm looking for above 40 for the year. And it may just get a couple flurries where we actually start to test the $48 level. I don't know if we'll get through that and stay there. But again, these black swans that are flying around, you never know. There could be some unforeseen anomaly out there in a silver market, gold market, or both, or something in the banking system again that all of a sudden ignites these markets and they don't look back. That's the reason you really want to be early and you really want to buy a quiet market. You really want to buy when you feel discouraged or the market's discouraged and sentiment is low and, geez, when are these metals going to move? And the mining shares are so decimated and on and on. That's the indicator of a bottom. And you're supposed to buy low and sell high. So I'm telling you, folks, this is really closer to a bottom than a top. This is a time you really should be looking into the metals.
Here's an interesting stat on the XAU. It's down almost 3% this week. Its lowest level since last August. Now, there's some despair for you.
It is. I called the bottom on the indexes. It was May of last year. August was another bottom, as you just mentioned. We're above that low. I think that low will hold, but it is discouraging, especially for people in the shares, such as myself. I'm in the metal, of course. I think everyone knows that. But, these shares have really been tough. Mm-hmm. And, we're looking at our portfolio. Our suggested one, which is pretty close to how I personally invest. And we've done better than a lot of these other companies, but when you're saying you've lost less, that's hardly consolidation. But for somebody that's down 80% on a lot of their stocks, we're only down, 12, 15 on some of them, it might make you feel better. I don't know. It's just been a tough year and a half, 2 years, and there's no excuses. I mean, it's just the way these bull markets manifest. And again, this is a time to really not be discouraged, even though that's how you feel, because it's the bottoms that are opportunities.
You can find David Morgan at silver-investor.com. It's the home of The Morgan Report. Hey, David, it's good to talk to you again. Thank you for your time.
Phil, always a pleasure. Thank you.
And thank you for listening. I'm Phil Mackesy for AmericanManganeseInc.com. We're back next week with more This Week in Money.